Lately, it's easy to find people predicting the worst, from economic collapse to market free falls. And caution is justified. New tariffs, shifting trade policies, and market pullbacks have created real uncertainty. But history would suggest that it's all not as simple or as bleak as some would have us believe. Let's take a look at historical perspectives. Looking back, periods of tariff negotiation have rattled the markets and even extended recessions. But it hasn't always derailed long-term growth. For instance, during the 1980s, tariffs on Japan caused volatility, but the broader market went on to have one of the strongest runs in history. Another example is after the tariffs of 2018. The S&P 500 had a choppy year, but rebounded nearly 30% in 2019. Let's talk about consumer confidence. Consumer confidence is how real people, not just traders, feel about the economy. Today, consumer confidence has dipped, but it's well above the levels that would typically indicate a deep recession. Historically, if consumer confidence remains strong, and that's above 80 to 85 on the Consumer Confidence Index, markets have stabilized and recovered within 9 months. Let's talk corporate fundamentals. Not all bad news. Despite the noise, many companies continue to post positive earnings results. Roughly about 2/3 of S&P 500 companies beat earnings expectations last quarter. And companies are holding on to records amount of cash, suggesting that they have flexibility to weather bumps and to also invest strategically or even expand when conditions improve. In closing, it's all about a balanced perspective. Tariffs and market volatility deserve real attention and can create real disruption. But if we're looking at history as a guide, it rarely tells the entire story. Market downturns can often create opportunities, especially when consumer confidence stays intact and corporate earnings stay resilient. My final thoughts are these. Caution makes a lot of sense, and everything is circumstantial. But writing off the markets entirely might also be a mistake. Thanks again for tuning in. For more simplified retirement planning tips, please remember to follow, like, and comment, and I'll see y'all next time.